So here we have a snippet of an Excel doc that I have created. I have used an 8-year time horizon, but obviously you invest your money thinking way later than 8 years into the future. I've just kept this at 8 years since I feel that's a good amount of time to get your footing on investments and whatnot. I know 8 years seems like a long time, but good luck getting investments in all of these areas to pay off in 6 months. If you found a way to do it that doesn't involve having rich parents you borrow money from, please let me know. The grey cells in career and real estate indicate going into debt. Using debt to invest in an appreciating asset such as your career or real estate is a good idea. Going into debt to buy assets now is also, in a way, shorting the local currency, which is a smart investment since inflation slowly erodes the value of your local currency over time. Now, be careful of going into debt to make moves such as this if you're uncertain you can pay it back. But that's why I advocate for stable jobs/careers, so you can go into debt knowing you'll be okay to pay off this debt. Year 1, you start your career at university. We will use university since it's most applicable to regular viewers of mine. You can go into a trade or something else that doesn't have debt levels this high, but there's no way I can have a blanket example that encapsulates everyone. And if I did an Excel doc for every type of profession, example, I have this same document for those who don't invest in a career but invest elsewhere, I'll be here for the rest of the year. So keep it simple, just use the example of going into student debt for your career. Each year is calculated separately. Example, you can see the career investment cost goes down as you go on. This isn't you paying back your debt. This is you taking on less debt each year as you finish your base degree and now are only doing your master's or something that's a little cheaper per year, since you're studying less overall subjects per year. Hence, you pay for less subjects per year. This is also assuming you're working in a career now and don't have the time to study full-time, as most people do. Again, there are exceptions. Some master's degrees are more expensive than a bachelor's. Like an MBA is way more expensive, but that's starting to overcomplicate things. For your career, you spend a lot of upfront time getting your base level bachelor's. Then you pursue higher education on top of that to set yourself out from the rest. And if you choose fields like IT, accounting, law, you have extra education that is required to progress further in your career. By the end of these 8 years, you're down around $122,000 on this investment in terms of your funding towards it. For real estate, I'm going to assume you work part-time during uni and are saving up money in a high-interest savings account. The reason I don't advocate for putting all of your money into the stock market is you can have down years like 2022 and 2023. What if you need some cash for real estate in a couple of years and the market is down? You miss out on this opportunity since you don't have enough because your money has gone down numerically. If you kept it in savings, the numerical value is slightly higher / around the same as when you put it in. If I leave $50,000 in savings, maybe it'll be $51,000 in a few years' time. If I leave $50,000 in the stock market, it could very well be $40,000 in a few years, depending on the market. Regardless, you're working part-time for years to save up. Eventually, you get enough for a decent deposit on a land / a house / real estate. You need a $500,000 loan by year 4 to fund your investment, and you can only get this loan now because you have a stable full-time job, which the banks love. Note this is an example. I think you'll be hard-pressed to find a bank that'll give you a $500,000 loan if you're only on $45,000 a year, which will be touched on in the next example, and I doubt you will have been able to save enough of a large deposit in a few years of working part-time to afford a 30+% deposit on your real estate purchase. Again, these are all rough examples. I don't have a blanket example to encapsulate everyone. Also, the spike in real estate in year 8 is presuming you did buy the next property in your name. Yes, your equity in property 1 went down, but now you have a second property in your name with that value added to your income. We will delve into this further later. By the time year 8 rolls around, you have enough equity in your first real estate investment for you to go out and get a second property, for example. Very probable. As for your business, while you're studying at uni, maybe you spend $1,000 of your part-time income on this. Maybe you spend way more, maybe less, but I wouldn't recommend spending too much on your business unless you're certain it'll pay off. I'm not going to spend a whole heap of money on my brand/business unless it starts consistently generating revenue. At the moment, mine is generating $0 in revenue, and it's costing me a little bit in terms of money, but a lot in terms of time. Even I won't be spending $1,000 on my brand this year, so I can't imagine a first-year uni student would either. And as you can see, the amount changes as the years go on. Some years you spend more as your business grows. You spend less when you need to save more for real estate and the bank checks your spending habits. You ramp this up as your career is taking off and you have real estate already, so you can afford to invest more into a less secure investment return, aka a business, and you earn well enough by year 8 where you can both get a second property and splash on your business. As for stocks, this investment provides immediate returns if you know how to go about it properly, but since the percentage returns on this is much less than the other investments, you put the least amount of money towards this. No one goes into debt to have more money to invest in the stock market. That's silly. But going into debt for a career in real estate is a good move. Some people go into debt to start a certain business, but I'd be careful of this move. It obviously can be done and has worked for some, but it also hasn't worked for others. So let's have a look at the possible returns on these investments. By year 4, you're working in your field. A $5,000 bump is possible in your first year as you maybe get a promotion once you prove your worth. The $8,000 and $10,000 jump in the other years may be a stretch. If you switch roles, this is easily attainable. But I'd caution against switching roles too often. Plus, $45,000 is probably quite low for your career starting point, depending on what you do and where you are. So maybe these $8,000 and $10,000 jumps just brings your salary to where it already is by year 7. I don't know. Again, just an example. Also note, if you do something like engineering or IT, these salaries are likely way more early on. Other careers you don't get the bigger bucks until later. But again, we will use more conservative salaries to help illustrate the whole investment idea. For real estate, the year 4 and on returns are calculating equity in your property, which is the value of that property. Here in Australia, when the value of your property goes up, you can take out this value and use it for other things, such as another property. I think it works like this in the States. Not sure about the rest of the world, but essentially your property going up is an appreciating asset. Obviously, you could also just sell this for a profit. I wouldn't do this, since if you sell your home, you need to jump back into the market at much higher prices. So you're better off just holding whatever property you do have. By year 6, aka 2 to 3 years into real estate, I'm going to assume you will rent out some rooms in your home. Here in Australia, you need to live in your home for 1 year before you can rent it out. So you can receive a benefit known as the First Homeowners Grant. Basically, I get $10,000 from the government for having my first house. This amount was higher in years past, which helped contribute to our stupidly high house prices. But the reason I bring this up is because I am assuming you will live on your own for a while. Maybe you don't want to rent out rooms and just want it for yourself, you and your partner, you and your family, whatever. If you don't rent out rooms, just decrease this figure a little bit, since the jump from 60k to 85k in 1 year is assuming you're now receiving rental income. For the business, let's just imagine you generate nothing in year 1 and you finally make some money in year 2, and then it just grows from there. Depending on how much work you put in, how much money you invest into it, and what type of business it is, these figures can be higher or lower, but we will assume your business only grows into the future. For stocks, I'll presume we get a modest return each year. No major options trades here like you see on Wall Street Bets. So let's check out the net returns for these investments. We burn money on the career investment until year 4, when we finally get to work in our field. Note that the returns are only each year's income versus expenses. It's not a running total. Year 4 shows a return on investment for the career, but we haven't factored in the 3 years prior where we were down $25,000 each year. Also note, we're not taking into account paying back loans, since this amount isn't a part of the initial expense/investment, and it doesn't detract from your income. In Australia, our employees withhold a little more tax from our salaried pay, but that's overcomplicating things. Plus, you can pay back more on your real estate loan if you want, or you can choose a minimum. For simplicity's sake, I am leaving loan repayments out of this. Plus, it isn't as important to the ultimate point of this example. The upfront investment and the returns are where the focus is at for this video. For the real estate investment, at first glance, It seems like it's just a money furnace. I'll use an example for 20 plus years from now later, but what sets real estate apart is it's an asset you can live in, which sets itself apart from the other investments. Now, another thing I will touch on, I'm going to assume most of the viewers of this video are within the whole self-improvement space as a whole, since that's where my channel got most of its initial traction. For those who aren't and are here for my investing thesis or are newer viewers, most of my channel growth has been from the self-improvement space. I have a different spin on this definition, as most self-improvement channels out there are more so on mindset, talking to girls, impressing girls, meditating, improving your mental health, getting fit, etc. Mine is more centered around a career, making money, getting fit, becoming financially literate, etc., which are all improvements to yourself, just in a different light. So, why did I bring this up? Because, since majority of my viewers are in this niche, they will have some interest in making themselves more attractive and appealing to girls. Now, becoming happier, meditating, getting fit, etc. all helps, but I assure you a career and having real estate will help in this field exponentially. At least it does when you're older. I had a convo at my supermarket job with a new staff member the other month, and we were just talking about work and where she used to work, what shifts she gets here, what shifts I work, etc. And working full-time outside of the supermarket job came up. And then naturally, my land came up. She asks, "Where is your land?" And I said, "It's in insert location here." Her response, "Wow." Because, as mentioned in prior videos, the place where I have my land is on the more expensive side of things. I could very easily afford a one-bedroom granny flat or a one-bedroom apartment. These are all still fantastic investments, but my area, where my land in particular, is a lot more expensive. Hence, the fact she was impressed. She was on the younger side, so I guess this helps with younger girls too. Now, obviously, I don't do this stuff for women. Having your own place and a stable, good, well-paying career benefits you way more than whatever attention you get from girls, but you see all these same self-improvement YouTubers telling you to invest in your business first and foremost, but they also make videos on how to impress women. As impressive as having your own profitable business is, I assure you, if your primary goal is women, then real estate is more impressive for the most part. I'd suggest you reorganize your priorities if your primary focus is on women, but to each their own. So to wrap this up, real estate is a different investment to others since it isn't purely just financial returns. You can live in it, it impresses most women if that's what you so care about, and it's more a long-term move. For the business, in this example, you're losing money for the first 3 years, but then you eventually turn profitable. By the end of these 8 years, you've made $13,000 in profit from your business, let's say, assuming you're doing it on the side and it's not your main focus. If it is your main focus, the returns could very easily be much more. But as mentioned in previous parts, is this guaranteed? No. A career in the right field is guaranteed because the jobs are literally needed for society to function. I don't need another fitness YouTuber on my YouTube feed, but I do need a builder for when I get around to building my house. Can't influence your way into constructing someone's home, can you? As for stocks, you'll note these provide the smallest returns in this example, even though earlier we said stocks can return 20%. I am presuming you're early on in the stock market exposure like I am. It takes a while to understand all the intricate details of the global financial markets. But we are also not investing too much into this either. Again, you could always put more money or more effort into learning this and have a much larger percentage return. So, at the end of this 8-year grind, we've made $174,000 in profit from our career investment. Yes, it involves working full-time, aka it isn't a passive investment source, but none of these are passive investment sources. You don't just click a few buttons on your phone and buy land and a house. You don't spend 2 minutes on a business and boom, you've created a profitable one. Even the stock market isn't entirely passive. You need upfront learning to make the bigger bucks. If you want to slowly trickle money into index funds, that's fine, it's safe, and you'll end up with more in 10 plus years and beyond, but you're leaving a lot of money on the table. Unless your career requires you to work 60 plus hours a week and requires really good grades on your postgraduate study or even bachelor's study, and if your business can provide exponential returns early on and you're certain it'll pay off, then maybe don't bother with learning the stock market. But if you can get away with passes in your postgraduate study like me, if your job/career only requires the standard full-time hours like mine does, Or if your business slash brand slash side hustle or whatever it's in is still in its early stage, it doesn't hurt to spend some time listening to this stuff. Plus, as I have mentioned before, I listen to the stock market stuff whilst I am doing other tasks. It's not like I come home from work on a Monday and spend the whole night sussing the stock market. I use this time for my business or study. I listen to investment stuff while working, having dinner. It's hard to type on a laptop and eat at the same time. So that's why I listen to stock market stuff while I'm eating as well as while I'm cooking, because it's just quite difficult to study while you're cooking and eating dinner. I listen to the stock market stuff in the shower. Obviously I can't have my laptop in the shower now, can I? So you get the point. If you drive to work / uni, why not spend some time getting the gist of the financial markets? In 5 years from now, you might be able to just open an app and click a few buttons and make some easy money if you spent all that time learning how it works. But I've gone way off track here. Back to the point. So $174,000 profit for a career over 8 years. For real estate, yes, we are down $500,000 since we haven't paid off the loan fully. You could have paid off your study loan with your career income by now. But remember, this debt is good because you've shorted your local currency, which is basically betting that the price of your local dollar, yen, peso, pound, euro, etc. will devalue over time, which it does everywhere. Home prices continue to rise, as does the cost of everything, so buying stuff with today's dollars is a better move than paying for it in 5 years from now when it's more expensive. The interest repayments on your debt can also possibly be lower than the inflation rate, so that's another point for taking out loans to invest in appreciating assets like real estate. As for business, $13,000 profit in 8 years, and the stock market has given us $3,150 in 8 years. In this example, 8 years in, career has been the best investment in this scenario of someone who went to uni. You could just not invest in a career and focus on businesses and stocks, for example, but where's the security here? This stock example is assuming you actually make money each year, and the business example is assuming it actually gets somewhere, which most don't. As for real estate, banks won't give you a loan unless your income is stable. They will give loans to business owners, but you need to provide 2 years of tax returns to show your income is consistent. At least, you do here in Australia. For employment income, the time is way less, maybe 6 months, maybe less, it depends, but it's not as strict as 2 years. And again, will your business move pay off? Will it be consistent? If you had 5 good years on, but year 6 you had a bad year, if you try to invest in real estate in year 6, and the bank sees your last year was bad, they won't give you the loan. Maybe you live outside of London, most states in the United States, most of Canada, and most of Australia, and thus you can afford to put off real estate, but from my perspective, try not to put this off. Spend several years working towards it. Don't put it off to try and get a business going. The odds simply aren't in your favor. Just have money aside for real estate and use your excess money on the business. So, let's have a look at the rough 20-year time horizon. The salary is now $122,000 per annum. Probably higher given the rate of inflation, but for now, let's just say in 20 years, from your first year into this career journey to year 20, you're on $122,000 per annum. You got here via pay rises at work, promotions, and switching jobs every several years. Since it's easier to find a new job that pays $10,000 more per year than it is to get a $10,000 pay rise at your current job. I've seen jobs that match my market skills pay $12,000 to $15,000, sometimes even $20,000 more than my current role per annum. But as mentioned in the Alex Hormozy section, I'm in a learning phase, not an earning phase. My current moves will pay higher dividends in the future. All in all, the career investment from year 1 to year 20, just like LeBron James this season, year 20 has returned more than $1 million. Not bad, hey? For real estate, it's returned almost $3 million. Note that there are things you need to factor in, such as renovation costs, which I have added in. I am presuming the renovation costs add to the value of your property, but sometimes they may only just preserve it. And as I have kept mentioning, these are rough figures, but the overall idea is the same. You get exponential growth in real estate as the years go on, your property spikes in value, you're allowed to charge more rent, you gain more properties since your career pays better and your equity in your home appreciates. So it's a great investment. I hate propping it up since you hear so many trust fund babies talk about how they're property investors when they got lots of money from mummy and daddy, and now they think they're a genius. If you're a genius, show me good returns on the stock market. To be honest, it's not hard to pick a good property. My area is all going up since we're feeling the effects from the Melbourne prices, not tricky at all. But anyway, I hate propping up real estate, but the fact is the system is rigged to be in favour of real estate, especially in the land down under. Furthermore, this real estate column comprises of equity increases and rental payments. I am assuming a decent sized house with enough rooms to extract decent rent. In year 15, the real estate income increases a lot, despite the fact we only took a $350,000 loan, which implies we drew out some equity in one of our other properties. This is true, but the extra equity and rent you receive from the third property outweighs this drawdown in equity from the other home, just in case you're wondering what my justification for the figures were. For your business, I'm going to assume consistent growth over time. Some years you earn less, but in 20 years I presume you get a good grasp of your business and what works, so the money you put in provides good returns. For the stock market, we have some up years, some down years. I am assuming this doesn't require much of your time, like how I only really do stock market stuff while I'm doing other stuff. If I find something really good, then I'll take time out of my day to focus on it, but more often than not, I turn these into social media posts, which is technically a move for my brand/business. Regardless, in 20 years, we make about $83,000 from clicking a few buttons on an app here and there. The percentage return works out to be less than the standard market return in this example, but these are just rough figures. I'm also assuming it takes you 9 years to really get good at this stuff, which is a lot of time. I'm in year 2 and I already have a good grasp of this stuff, so these returns are honestly probably too low given what you can learn in the meantime. So, in terms of a percentage increase on your total investment, the career investment drastically outperforms the others. However, in my example in part 4, I was comparing an investment into a degree versus not going to uni and just working your way into promotions. Thus, that's why this example is showing a 1000+% return. Per year, this is around 55%. You can round this down to the 30% we calculated before, since this sheet assumes you will make $0 without a career investment, which isn't true. We can also see a total return of 221% on real estate over 20 years. Works out to be around 11% per annum, which is close to the average. I just put in some figures I would roughly estimate, and turns out they're pretty close. That's cool. A business in this scenario returns almost 8% per year. We can definitely get a higher return per year if you went ham into the business, but I find this to be a more realistic number for most people, since most people need stability in their life, aka a career. Of course, you could spend $50,000 on your business to make $600,000 per year. It's happened before, but where are you getting this $50,000 from in the first place? A regular minimum wage job? That'll take you a while, especially if you aren't spoon-fed by your parents/guardians. If you made this strictly from your business and your initial funding was from a part-time job or whatever, kudos to you. That's impressive stuff, but what are the odds of this happening? This stock market example only provides a pitiful 4% per year, according to this calculation, but it's just taking what you put in each year versus a rough guess of a return. I will also assume you don't have as much time to learn the investments as I do, even though I don't have that much time, and also this takes into account the entire 20 years, which includes 8 to 9 years of getting the hang of things. If we only include year 9 onward, aka once we have a good gist of the market, the returns for this time frame is around 89%, which is around 8% annually. Still below the 10% people say the market has given in years past, but again, rough figures, chances are the returns are higher if you take the time to learn this. So this has been a rough example of someone who decides to go down the career path, but is also focused on the other 3 investments. You can't really get into real estate without a career, since you need the stability the bank is looking for, plus you need the extra pay rates. You can get these without a degree or investment into your skills or whatever, but it's probably a more stressful path, all things considered. The example also assumes your business actually turns profitable, and that you work on this on the side. Note how the business investment doesn't interfere with the money used for the career or real estate. Worst case scenario, we had a failed business venture, but we still have our career and real estate intact. Same with the stock market. Worst case, we lost some money, but we still have a good life overall. To wrap this up, these are rough investments. Your career income could very well be more. It could be less, but I doubt it. After 20 years in a professional industry, I would assume you'd be well into the 6-figure range, especially given the inflation rate and whatnot. Real estate is in the same boat. Could be more. I doubt it will be less, but 3 properties over 20 years if you have a solid career is very probable. A business, I am being generous with it taking 7+ years to really kick off, but I am also being generous with it assuming it actually takes off. Have faith, but don't put all your eggs into this basket, as this basket is fragile, and so are eggs. Not sure what that means, but the point is don't go ham into this risky venture. Have some stability and something to fall back on first. As for stocks, this is where your money goes once you've maxed out the returns on your career, real estate, and a business. Example, for me, no point paying for a grad course in nursing when my career won't provide me any extra salary increases by having this. So the investment into my education for my career is maxed out. For real estate, you can't buy anything with $4,000. Maybe you can pay off your debt faster, but maybe you're willing to use this to invest into a business and hopefully turn that $4,000 into a much larger amount. You have the room to do this now as you have the career investments, your degree, your postgrad study, paid off, or at least you've completed this and no longer have to take debt for any more study, and you've got your first bit of real estate. And now you just need more time for equity to appreciate and rental income to rise. So yeah, basically your career and first bit of real estate is taken care of. Now you can invest into your business. And maybe you can only spend $3,500 before it's not worth it anymore. Example, you bought stuff for your dropshipping business, but if you spent another $500, it would be on stock that wouldn't sell. So this last $500 may as well go into the stock market for a chance to grow that into more than $500. Worst case, you'll lose that entire $500, but it didn't impact your business, it didn't impact your real estate, and it didn't impact your career. So I hope that provided some perspective on the 4 main investments. Each has their own place, each has their own likelihood of success, each has their own potential returns, each has their own requirement of time, and each has their own place in your life. The lowest returns are on real estate. They just seem higher due to the upfront investments. You need hundreds of thousands of dollars to get in, so a 10% return on this money seems very high, but a 20% return on your few $100 stock market investment is actually higher. But because the initial value was much lower, the return is much lower. However, real estate is the most guaranteed return on investment, hence the overall lower return. Career is the next possible lowest return, but it's almost as secure as an investment in real estate. You more than likely won't earn $10 million a year from your career. It's more probable to earn this money with a business, but the likelihood you'll make any money at all with a business is substantially lower than that of a career investment. Speaking of a business, it can provide much higher returns on your money than real estate and a career, but the likelihood of making a return on your investment is much lower. As for the stock market, you can make 400% plus returns in one day if you get a good trade. It's super unlikely you spend $50,000 on your business and make back $200,000 that day. You may be able to flip $50,000 into $200,000 a year with a business, but it's unlikely to happen in a day. This is to say, the highest potential returns quickly are in swing trading, stocks/options, etc. But you can very easily lose this money. In a business, you can also lose money, but the rate and speed is much lower. If your business fails, chances are the money slowly trickles out over a few months. Whereas in the stock market, you can lose half your portfolio in less than 2 days, like I did in November of 2022. You can't lose half your real estate value in 2 days. You can't lose half of your salary in 2 days. You won't go from earning $100K a year to $50K a year through a demotion or anything like that. Real estate is the most secure, but its maximum possible returns are the lowest. A career is almost as secure, but its returns on investment are almost as low as real estate. A business is not very secure at all, but you can earn a much greater return on your initial investment than you can with the other 2 investments. The stock market is the most volatile, although you can obviously learn this well. If there's one unforeseen factor that happens, such as a foreign central bank interfering with a local bond market, this can ruin your current trades. So, although I have said a business is the least stable and guaranteed of the 4 investments, I trickle the money into a business before I trickled it into the stock market, as this extra money you trickled into the stock market can get wiped out instantly, whereas at least you may have something to show for that money in your business. Example, buying obsolete stock in dropshipping. I guess at least your store has more stock, rather than nothing. Or for a YouTube channel, Better that money went into a video editor or a thumbnail creator rather than it evaporating in the stock market. At least you had a video to show for that money. Yeah, maybe you didn't make any money at all, but at least that investment didn't totally disappear. My advice/recommendation is get skilled in an in-demand career, which you can find using government statistics. Example, type in projected job growth government data. Find an industry that is shown to keep growing, search job websites and see how many jobs in this area there are. Don't just search job websites, since obviously these specific jobs won't be available by the time you finish your degree or whatever. But if you see the government data showing good job growth and a lot of current jobs available on websites for this career, then it's a good pick. Save as much time as you can for real estate in the meantime. Do have some investments into a business and the stock market on the side, but not so much that it causes you to not have enough for a deposit for real estate. Example, $5,000 over a few years into a business and stocks probably won't cost you the chance at a house, but $20,000 probably will. So limit your business and stock investments to a couple thousand per year. Put as much as you can into a business without it impacting student debt repayments or real estate. Example, I paid $4,500 off my student debt last financial year. I made sure this money was put aside. I didn't chuck it all into buying equipment for this brand. I also have more than $50,000 saved in a high interest savings account, as I need it for real estate. I didn't just bulk buy a lot of video editors for this channel to spam out random videos. Once you feel you've put enough into your business where you can't extract any more value, then put this money into the stock market. If you feel the best investment you can do is spending $250 on a microphone, but you have $350 spare, and this $350 wouldn't do much for your business, and you don't need this right now for student debt repayments or paying off a real estate loan, then you can justify putting this into the stock market. Of course, you can always have more money put aside to pay off student debt or loan repayments, but once you have the base covered, that's when you can afford to put the money into more risky investments. Hope this helps you understand the hierarchy of investments and where you should devote your time, energy, and money. Any queries, questions, or concerns, let me know in the comments. Thanks for your time. That is all.